Welcome back to Market Day Report. I'm Chris Swift, sitting in for Marlon Bowling. Thank you for joining us this morning. We have had a really wild morning this morning with grain prices sinking a little bit lower. Let's take a look and see where they are right now about mid-morning. Looking at our corn board, we come up, still a little bit worse. July corn down 14 3/4, 5.86 1/4, sitting on the low of the day. December corn down 11 1/4, 5.32 1/4, again on the low of the day. Over the soybean chart, that had been a little bit of a bright spot this morning, coming back to almost unchanged, but now July down 9, 14.05 3/4, hugging low of the day at 14.04. September beans down 10 1/4, 12.77 even, and new crop November down 8.5 at 12.58 1/4. Going to to Chicago wheat, down 10 3/4, 6.31 1/4, about a nickel off of its low. September down 11 3/4, 6.42 1/2, and December down 12 1/2, 6.59 1/4. Now for the Kansas City hard red winter wheat, down 13 1/2 on the July, 7.69 3/4. September down 14 1/4 at 7.66 3/4, and December down 14 1/4, 7.69 3/4. Notice there are literally no spreads at all between that, no carry, and we have seen a huge inverted carry charge for multiple months in a row. That all seems to be coming back down now to where we're either going to even them out or we may go back into a carry charge market. Got the spring wheat down 17 1/4, July 7.95 3/4. December spring wheat down 16 1/4, 8.05 3/4. I'd like to bring in my guest, Ted Seifried. Ted is with Zaner Ag Hedge. Ted, I certainly do appreciate you joining me this morning. Good morning.
Boy, howdy, Chris. How you doing, man?
I'm doing great. We've had a little bit of a slower trade in the markets this morning. Can you give our farmers and ranchers a piece of something to go by to maybe help them get over this little downturn that we're in right now?
Yeah, we were hoping that export sales might do that, Chris, and it just didn't. Export sales came in within the range of expectations for old crop corn, old crop beans. We really didn't see much in the way of new crop sales. Wheat was the only one that was maybe okay, but then you had the cancellations to China on the corn, and that's really not a good look. That's the second one that we've seen this week. And so now that really breeds a lot of concern that that big string of sales that we saw to China, well, how much of that is going to get canceled, right? And then it really begs the question as to why, right? Because if the grain corridor, if Russia's going to back out of the grain corridor, you would think that would be a big concern for China because they get a lot of their corn from Ukraine. But if Ukraine's not shipping corn anymore, you would think that's maybe why they put a lot of those sales on the books. So does China know something that we don't? Is that grain corridor deal going to be extended because China's persuading Russia to keep it going, and as well as Turkey? We know Turkey wants that to happen as well. So I don't know. It's sort of a curious thing that the Chinese are canceling U.S. corn sales in the face of the possibility of the grain export or grain corridor ending on March 18th. So sure. Either way, it's a bearish factor for the markets. I will say this, the May is kind of holding up fairly well compared to the July in both corn and beans, suggesting that maybe we're going to see some deliveries happening when we get into delivery period. But if that doesn't happen, and that front month or that spot and front month spread really starts to fall apart, that might be another really bad look for the market. So it's going to be very interesting next few days here, Chris.
Absolutely. And we still got tomorrow left to go, and then we've wrapped up all of April, and now we start into May, and May is going to be the big heavy planting season that we see. So absolutely, with the U.S. corn crop, it's looking like it's going to go into the ground very well. Soybeans right in behind it. We may have some headwinds to have to face here coming up. Ted, I certainly do appreciate you joining me here. We're going to take a quick break. We're going to come back and talk livestock for just a second with Ted Seifried. Welcome back to Market Day Report. I'm Chris Swift. Let's take a little look at the livestock markets and see what they're doing. And looks about the same right now, with June fat cattle up 45 at 165.02, August up 35, 163.75, and October up 25 at 167.67. Our feeder cattle market this morning up 162 now on the May, 211.90, right up on the high of the day. August up 75, 231.70, again up on the high of the day. And the September contract up 105 at 234.77. Take a look at our lean hog market this morning, and a little bit softer after yesterday's big rally now. June down 57 at 89.70 with 89.32 the low tick. July down 30, 92.22, and August down 10 at 93.25. Let's get Ted back in here again with Zaner Ag Hedge and see if we've got anything with the livestock market this morning. We know we've seen some huge spreads out there in the feeder cattle market. The fat cattle market has been able to hold really, really well. And so now with the beef market having moved up too, we're all waiting for the consumer to see these higher prices. What do you think they'll do?
You know, at least the market isn't too worried about it. Now, we know that exports weren't all that great. We were down 50% from last week at under 10,000 metric tons of beef. So that's not been the bright spot for beef demand. It's been domestic, right? And higher prices have not swayed the U.S. consumer. And so the thought, at least, is today that these higher prices won't do that either. You look at the stock market finding a little bit of strength today. You feel risk on is happening in a little bit, especially for things that are affected by stock market and how that gets people to spend money or not. So, you know, despite poor export sales, we've had a nice reversal higher in the cattle market. It's breaking above a level of consolidation and i.e. a level of resistance. It looks like it wants to extend up to the high. So that market looks good. I still think we have more upside potential there for cattle.
Good deal. Well, I tell you what, with what we have seen here most recently and the consumer having still seemingly have money on there, it's going to be interesting over the next couple of weeks to see how they react when we know that we're going to get the grilling season. And that's one thing we all look forward to is that grilling season. And maybe we'll have some good specials or features that the grocery stores will give us. So, Ted, I certainly do appreciate you coming on this morning and talking with us. And Ted is with Zaner Ag Hedge. And Tammy, I believe that's back to you now.